The cement sector is once again in focus. ACC would be delivering its numbers. This time around, what are we looking for? We're looking for volume trends. We are looking for company commentary in terms of how exactly is demand panning out, the real estate space, the individual home building space, as well as how exactly is infrastructure demand actually holding up. Now, along with this, important to note that coal prices, petcoke prices, important and key raw materials for the entire cement industry, they have been on an upswing. They've seen significant upward movement, and also we understand that there have been a lot of delays and there has been quite a bit of a shortage as far as shipments of coal, etc. are concerned to the entire cement space. This is something that could worry the industry, at least on a temporary basis. So it's going to be important to see, given the fact that ACC is a very large cement player, what is it that the company is saying in terms of demand, in terms of raw material shortage or price hikes, and how are they passing on pricing pressure that they are witnessing, the input cost pressure that they are witnessing, how are they pricing it on to the end consumer? Looking at the entire preview, the 18-hour poll indicates that revenues are seen at 3,815 crore, up almost 8% on a year-on-year basis. EBITDA is seen close to 680 crore, up 1.5% on a year-on-year basis. Margins are seen dipping 120 basis points again on a year-on-year basis, mainly due to rising input cost pressures. When you're talking about the profitability, seen higher by close to 12%, and analysts are estimate volumes for this particular quarter to stay in the range of 6.7, between 6 and 7 million tons would be the range where analysts are actually penciling in the kind of volume growth for the quarter gone by. Now, how did the quarter gone by actually pan out for demand? June as well as July 2021, significant rebound from the worries of the wave 2. After that, demand was again impacted by the monsoon in August, but there was even more erosion in demand as per dealer checks in September. In fact, we understand a 5 to 10% year-on-year dip in demand in September 2021, depending on the region where there was flooding as well as intense and heavy rainfall. Volume are seen growing on a year-on-year basis, owing to better cement demand. Gross margin is expected to be stable year-on-year, but lower sequentially as costs escalate. Other than that, important to watch the commentary on how companies are passing on higher input costs, commentary on clinker factory rising input costs, reduction via Project Parvat. Remember, last time around, ACC as well as Ambuja managed to actually go ahead and give a significant amount of beat as far as the analyst polls are concerned, analyst estimates are concerned, simply on the basis of the fact that Project Parvat and the kind of MSA agreement that both ACC and Ambuja are having with each other, it has helped reduce the operational cost for both of these companies significantly. Any update on that is also something that analysts will be keenly waiting out for.